Welcome back. Now listed on the alternative investment market in London and the Euronext Growth Market in Dublin, Greencoat Renewables is planning a secondary listing on the JSE Altx as a means to diversify its shareholder base. Diarmuid Kelly from the group joins us now with greater analysis on the move. Diarmuid, thanks so much for your time this afternoon. And as we get started, just take me through Greencoat's investment case. You are operating in a sector that really has headway to grow.
That's absolutely correct. Good afternoon to you. Greencoat is a leading listed owner and operator of European renewable energy infrastructure assets, and we currently have a market capitalization of circa 850 million euros. What we do is we have a diversified portfolio of 40 assets across 5 European jurisdictions. That includes wind farms, solar farms, and battery storage assets. And our total capacity amounts to about 1.5 gigawatts. We have a progressive dividend policy, and we have a current euro dividend yield of approximately 9%. And equally, we expect to have average dividend cover through until 2029 of 1.9 times. Our financial strategy and progressive dividend policy is typically underpinned by government-backed contracted revenues, which provide us with secure and predictable cash flows. And we believe we're well positioned to play a leading role in the European energy transition, which is expected to require 1.3 trillion euros of investment through until 2030.
And talk to me about why you are eyeing that JSE listing. As I understand, and as mentioned, you are listed in Dublin as well as in London.
That's absolutely right. So Greencoat Renewables first listed, the IPO took place in 2017, and we're pleased to say that we had and we still have significant South African investor support within the business. This particular journey has probably been something we've been working on for circa 12 months. It began with a detailed feasibility study looking at the tax, legal and regulatory aspects of a JSE listing, and we followed that up with a period of prolonged diligence with a select number of high-profile institutional South African investors. Off the back of that, we did a non-deal roadshow where the management team came to the local market and really looked eye to eye with the investment community. And that really provided us with the conviction that we needed to understand that the returns profile that Greencoat Renewables provides is something that will be coveted within the local market.
So clearly we are seeing interest from local investors. I know that the listing is subject to regulatory approval, but do you have any direction on when interested investors can find the Greencoat listing on the Altx?
Absolutely, yes. So as I said, we are very well progressed in finalising all the various documentation and approvals. We released our intention to list yesterday, and I think the next formal step will be to release our pre-listing statement, which will likely come out over the coming weeks. So we would like to be in a position to execute the full listing over the coming weeks and short months.
All right, so probably around June. Now let's zoom in on the management structure. What are the benefits of Greencoat's partnership with Schroders Greencoat LLP, and how does the management team's experience impact the company's operations?
Certainly. So Schroders Greencoat is the investment manager for Greencoat Renewables PLC. It was first appointed in 2017, so we've got a long history and relationship with the business. What I would say is that Schroders Greencoat are a very well-known organisation who specialise in the renewable energy sector. We have over 120 staff throughout the globe located in the jurisdictions where Greencoat Renewables is active, and we bring a huge amount of sector-specific and leadership experience to the table.
And I know that the company operates in 5 markets within Europe. Spain, which is one of the markets you operate in, was hit by a blackout earlier this month. On the back of that, have you seen pent-up demand for your services in that country in particular?
Well, it's interesting. So our exposure to the Spanish market is relatively modest.
Okay.
That being said, with specific regard to your point, there was an outage, as you say, that was particularly well publicised. That being said, I think the point there is that it was very, very short-lived, and we have not seen any significant disruption to our services as a result of that.
Diarmuid, talk to me about the dividend policy and what local investors can expect in terms of returns and payouts from the group.
Certainly. So since inception in 2017, the business has paid out dividends of over 350 million euros. We have a progressive dividend policy. The progression from 2023 to 2024, to illustrate that, was 5%. And looking forward, we have average dividend cover over the course of the next 5 years of just under 2x. So I think moving forward, we can expect to be in a position to pay out north of 300 million euros in dividends over the course of the next 5 years, which equates to circa 30 cents.
You know, as a company operating in that renewables space, just talk to me about how you plan on leveraging on the growing demand for renewables. I mean, the EU aims to increase renewable share of energy consumption to 42.5% by 2030. Are you positioned to benefit from that?
We feel we are, yes. As you state, the growth opportunity is absolutely enormous within this market. And what we're seeing specifically is green energy demand fueled by big tech and AI. Schroders Greencoat has developed a specialism over the course of the last 18 to 24 months, which is capitalizing on that specific demand through entry into corporate PPAs with these type of organizations. So we think we are particularly well positioned to take advantage of the growth opportunity moving forward.
All right, let's leave it there, Diarmuid. Thanks so much for your time and sharing your insights just ahead of that JSE listing. That was Diarmuid Kelly, CFO of Schroders Greencoat Renewables.